Steinhouse, and welcome to Money Chat Now. Money Chat Now is a politically charged stock market pre-show giving you the politics behind the biggest moves in the stock market. It is presented with comedic common sense by an expert in financial literacy. And hey, that's me, Larry Steinhouse. Today is Wednesday, June 8th, and I want to welcome you to the show. We are here live on WWDB Radio 860 AM in Philadelphia, and we are live on Facebook, Twitter, LinkedIn, and YouTube. Of course, you can find me on Facebook, LinkedIn, Twitter, True Social, TikTok, and all those other social media sites by searching Larry Steinhouse. By the way, TikTok now has its own Money Chat Now page and also an investor schooling page, so take a look at that. Just remember, if you're watching online, hit that like button, hit that share button, and don't forget to subscribe to the YouTube channel and like the Money Chat Now page on Facebook. Hey, by the way, a couple of people I want to say hello to that have joined us already. We have Joe and James and Peter and Doug K, that is. All right, thanks, guys. I totally appreciate you, and John, of course, as well. All right, also, if you're commenting from a group and it's not the Money Chat Now fan page, your name may not show up on my dashboard, so please go to the Money Chat Now page and comment there so I can recognize you. Hey, by the way, if you're a first-time watcher on Facebook or LinkedIn or YouTube, just say hi, let me know your first time. Be awesome. All right, I got a couple of people. We got Linda, my lovely wife, as always, I love you. And of course, we got Mike and Sal also saying hi. Hey, by the way, you can attend a complimentary class tomorrow night by going to Investor Schooling. And there you will learn about real estate investing and stock options trading from those who do it every day. I promise you tomorrow, if you've never attended a class, tomorrow's the class to attend. You're going to be learning something really special. All right, on today's show, we're going to be discussing, of course, the futures update. We're going to be talking about Fintech and Apple. And we're going to talk about get your equity now. Get your equity now. We're going to talk about that. And, is there a food supply shortage coming? I don't know. Might be. We'll talk about that in a minute. All right, let's talk about the futures right now and what's going on. So first of all, it ended up okay yesterday. Actually, it would be considered a good day because it actually ended up. The Dow finished up 264 points. The S&P was up almost 40, and the Nasdaq was up 113. Not bad. But remember, that puts the Dow just over 33,000 again, and that could be scary if my range theory is correct. The range might actually be changing again when you consider that the dead zone is the end of this week. That could push us into the 34,000 range. That's about it, right? That would be like, think about like a thermometer on a boiler with markings that say normal, high, very high, and danger. At 34,000, we're going to be on the edge of very high, heading for explosion danger. So if it does hit 34,000, I'm going to tell you right now, if it is 34,000, that's a SPY put play, definitely. The main earnings yesterday, or the name in earnings yesterday, was Smucker's. And with a name like Smucker's, it had to be good. Apparently, the food and beverage company did very well in earnings, and the stock jumped about 6%. It looks like peanut butter and jelly will always be a good staple food when gas prices are too high to afford to eat out. In the morning yesterday, the Dow was down for a while when Target announced their earnings, and the company claimed they had excess inventory. Excess inventory? That, of course, could be signaling that people aren't buying as much stuff. I also took it as a sign that supply chain problems have eased as well. Target also lowered its operating margin guidance for the quarter. Walmart shares followed Target lower, sliding 1.5%, and that caused Amazon to also fall about 1.4% along with it. By the way, I got to tell you, I still think Amazon's a great play to me. If you did as I suggested and bought 5 shares of the stock before the split and then sold the covered calls yesterday, or Monday, I should say, with an expiration date of this Friday, you are probably very happy right now. If you bought the calls ending this week, I also think you're going to be okay. I expect it to move up. My target for Friday, by the way, not for Target, my target for Amazon is 130. But watch this one because it depends on the rest of the market rallying. I'm going to tell you that it's going to be bumpy until Friday or Monday. Energy, and only is going to be bumpy between Friday and Monday is because the dead zone probably ends on Friday. All right, energy was one of the top performing sectors on Tuesday as oil futures hovered near $120 a barrel. Ugh. Exxon jumped more than 4% following an upgrade from Evercore, putting the stock above $100 per share for the first time since 2014. Phillips and Chevron also gained about 3.7 and 1.9% respectively. And of course, when the bond rate dropped a little bit, Apple rose, and sure enough, it rose again yesterday. Both happened yesterday, of course, and the bond rate fell just below 3%, and then Apple rose about 1.7. Don't forget, we have the big day on Friday when the Consumer Price Index results are announced. This will be for May. This is the main economic indicator that investors are watching for this week. If the reading is cooler than April's numbers as expected, some could actually interpret it as a sign that inflation has peaked. I personally believe inflation has peaked, I should say. Now the real question is whether the Fed is going to slow down the increase of interest rates. I hope they do. And if they do, the market will jump. So this Friday is going to be very telling. It's going to be a really important day on Friday. All right, we got a lot of stuff to cover today. So let's take a look at the futures. And right now we got the Dow is down 104. Actually, it just moved again. The Dow is down 98. The S&P is down 7, and the NASDAQ actually went positive. Ooh, that might be nice. Hey, I want to say hello to Glenn, who just joined us as well. By the way, if you're watching online and it's your first time, hey, by the way, everybody online, if you're watching online, just say hi. I want to see how many people are out there. I can't tell how many people are watching. I can only tell by your comments. So if you're out there, say hi. All right, let's talk about Fintech and Apple. It looks like the age of carrying a credit card in your wallet, your physical wallet that is, will be ending shortly. I'm sure you've experienced tap and pay with your credit card, and some of you may have already used tap and pay with your iPhone or Android using the built-in digital wallets in the devices. Well, Apple is making a major play into the fintech world with new features inside the iPhone wallet on the iPhone. Some of you have used PayPal and other payment services. As you know, they have payment plans or even 0% interest plans, some up to 6 months or a year for purchases over $100. Well, Apple is introducing a slew of new features in their newest release of iOS 16, and it will include financial software and built-in PayPal-like system that will be as simple as tap and go. They are also adding a service that lets you tap another iPhone to make a payment directly to them. So if I want to give my wife money for groceries in the morning, I can just tap her. I can tap her phone. Hey, whatever happened to the kiss goodbye? Now it's a tap on the phone goodbye? Anyway, this is a direct competition to the Square devices made by Block, and the advantage to Apple competing in the fintech space is that more users will use the Apple Pay system. Apple receives a small portion of each sale when someone uses the Apple Pay wallet system, just like the credit card companies get a small portion of each credit card sale. The buy now and pay later model has also proven to be very lucrative in the past few years. The real question is, can it be maintained? Now, I don't know if you realize this, but people are putting more and more stuff on credit cards and getting more and more into debt because of raising prices, and this may backfire to Apple in a few short years, and like maybe even the next 2 years. A lot of people are buying stuff, and they're buying stuff like crazy, especially gas. Other fintech companies like SoFi saw a major drop in share prices when it was revealed that the companies had more bad loans on the books than expected. We've also seen other fintech companies like Coinbase and Robinhood crashing and burning, right? As money gets tighter and the fun of buying junk assets like cryptocurrencies are not as in fashion any longer. I just pissed off a whole bunch of people when I said junk assets like cryptocurrencies. On the other hand, Apple may just be the perfect play, or maybe getting into the perfect time in this play. If they start this up now, they will have great traction as the other fintech companies all fall by the wayside. I wouldn't be surprised if many of them get gobbled up by Apple in the next 2 or 3 years. Maybe you'll see Apple owning Coinbase. It's possible. By the way, while we're on the subject of the iPhone, have you felt the pain of the annoying charger connector that keeps changing, making your old charger or charger cord obsolete? I have Apple devices that run on the old big plug. I have devices that run on the lightning plug. And now I have devices that run on the USB-C connector. I also have an Android phone that runs on some other connector. It's a real hassle. And apparently I'm not the only one complaining about it. Well, finally, the European Commission, the executive arm of the European Union, is going to force smartphone manufacturers like Apple and other electronic makers to equip their devices with a standard USB-C charging port. The EU lawmakers on Tuesday agreed to a single mobile charging port for mobile phones, tablets, and cameras. It means equipment makers will have to comply with the new terms by 2024. Yay! This is great news. No longer will I have to walk up to somebody and say, do you have an Apple charger? Do you have an Android charger? And then when they give it to you, you say, oh, no, not this one. I want the one that looks like this, as you show them your iPhone input hole. Maybe we can even go back to where the hotel rooms have clock radios that you can rest your phone on the adapter on the top, and I'd be okay when I forget my charging cord. Well, it's going to be great. But then again, I'm kind of wondering what happens when a new device comes out that needs more connections than the USB charger adapter will give them. I don't know. I guess we could always put our phones on top of a Tesla charging at Wawa. Right? Imagine this. You have a Tesla charging at Wawa. You put your phone on the roof. Maybe it'll charge it. Who knows? All right, let's take a break here while I recharge with my USB coffee connector. All right, coming up, we have the food supply fire conspiracy. Stay tuned. We'll see you guys in a minute.
Okay, so you thought about buying and selling real estate. You thought about investing in the stock market, but don't know where to start. Well, what if you could find a place to unlock strategies to master both real estate and the stock market, all without the headache? That place is Investor Schooling, hosted by Larry Steinhouse, an expert in real estate, financial literacy, and the ins and outs of the stock market. You can attend Investor Schooling in person or online 8 times a month. You can and will learn how to make money in real estate, and you will learn mastery of stock techniques such as options and covered calls. You will even get a chance to ask your one burning question to the stock option sultan, the master of picks and plays. Call today for free information and receive a complimentary pass to attend classes or register online at investorschooling.com. Don't delay. These passes are limited, so what are you waiting for? Call in today or visit investorschooling.com. That's investorschooling.com.
Good morning and welcome back to Money Chat Now. I'm your host, Larry Steinhouse. And of course, if you'd like more information on Investor Schooling, you can go to investorschooling.com or call 866-424-2829, 866-424-2829. Hey, I want to thank you all for listening on WWDB Radio 860 AM in Philadelphia. And of course, if you're watching online, please hit that share button. All right, everybody hit that share button. Drop the share button down. Hit it, share it on your page, and share it in groups that you know may benefit. Also, hit that like button. Let me know you enjoy the show. And you can also leave comments on Facebook, Twitter, LinkedIn, and YouTube. And I'll even try to respond to them. Hey, a couple of people saying hi that I want to make sure that I say hello to. We got Glenn and Karen and Tom and Dan and my brother Seth. How cool is that? All right, I love it. You guys keep watching the show. I'm hoping you're enjoying it. Let me know you enjoy it. Say you like it. Say you don't like it. Put it up on the comments and let everybody else know about it by sharing it. All right, of course, we've been talking about the futures update. Right now, the Dow is down 112, the S&P is down 9, and the NASDAQ is down 6, about 6 or 7. Not bad, because I'm not expecting it to be great today, but we'll talk about that in a little while. We also talked about Fintech and Apple creating their own Apple Pay system that's going to compete with PayPal, and hopefully they're going to be changing those cords soon. Coming up, we have Get Your Equity Now. I'm going to talk about getting your equity out of your house. And then the food supply shortage. Hey, it's always fun to talk about stuff that the government is doing to us. And then, of course, we have today's picks and plays. But did you guys hit that like button? Come on, hit that share button. I've been begging you. Do it. Hit it. All right. Don't forget to leave comments on Facebook and LinkedIn, YouTube, or Twitter. And if you're listening on WWDB Radio, be sure to set a preset to this station and listen every day at 7:30. And also look up Money Chat Now page when you get home. And don't forget to tell your friends about the show, too, at 7:30 in the morning on WWDB. And before we start the second half, hey, did you guys order my new book yet? Hey, go to wherever fine books are sold and look up Money Hacks by Larry Steinhouse. And I promise you that you're going to enjoy it. You can get it now on Kindle or Nook. And then the physical book will be pre-ordered for arrival in about 6 weeks. All I'm doing is getting great reviews for the people who have previewed it and the people who are reading it. I promise you, you're going to like it. It's got some really great stuff on it. All right, let's get into the second half. Let's talk about home equity loans. Look, I've been telling you that in December, I refinanced as many investment properties as I could. Look, I know that in my lifetime, we're never going to see interest rates as low as 3.5% to 4.25% again. It's over. It's never going to happen again. So I made sure I can get into this great time of refinance history. Well, as you know, the average mortgage rate has gone up, and now it's just under 6%. So that was pretty good move on my part. But in case you missed the boat in December, don't make the second mistake of leaving your equity in your home. The amount of money mortgage holders could pull out of their homes while still keeping 20% equity cushion rose by an unprecedented $1.2 trillion in the first quarter of this year, according to a new analysis. That's the largest quarterly increase since the company began tracking the figure in 2005. That means you could tap the equity in your home for just about anything you'd like. Now look, be careful here and don't make the mistake that others made in 2005 that helped lead to the disaster of 2008. My suggestion is get a home equity line of credit and have it ready to go when bargains such as investment properties and bargains in the stock market arise. Right now, your home will appraise for numbers that it may not appraise for in the next 2 years, so house pricing are definitely going to go down. And if the average of you and the average home of other Americans is about $200,000 in equity in your home, that equity number will probably decrease about 25% in the next 2 years. That could be the difference between a line of credit of $150,000 versus a line of credit of $75,000, depending on the value of your home. So I would start to apply for this now. I have several home equity lines of credit just waiting for me to be used when the time comes. I suggest you talk to smaller banks about these programs. As some of you may not know, some of the bigger banks like Wells Fargo have stopped issuing home equity loan and credit because they're afraid of the repercussions that could mimic 2008. Be wise, get the lines of credit, and then be wiser on how to use them. Come to think of it, I'm going to be teaching on how you can use a HELOC tomorrow night. I'm going to be teaching how to use a HELOC in a system that will help you pay off your home debt in 13 years instead of 30 years. So if you have a 30-year mortgage, how would you like to pay it off in 30 years? And it works so well, it's so real, and in fact, it doesn't even cost you anything more than what you're paying now. And if you've never been to a class on Thursday, you want to come to this one. If you're watching online and you're far away, you can also attend via Zoom. I'm telling you, go to investorschooling.com, RSVP, because tomorrow's going to be powerful, powerful class. All right, by the way, let's talk about the food supply shortage. Oh, man. I keep seeing ads selling me freeze-dried food in containers claiming that a food supply shortage may be coming. Then I see an occasional meme about food suppliers and food factories burning down or exploding. Look, when we add the baby's food formula to all of this, it kind of makes me wonder what's going on. I noticed an article the other day that made me want to look into this further. After all of this, after I've seen the baby food thing and all these food suppliers, it was an article about a large egg company losing a barn full of hens and eggs. Apparently, a mystery fire broke out at the Forsman Farms in Howard Lake. This will certainly affect the supply of eggs in the area, and I don't know, it's kind of crazy, right? But let's look at the data about other fires and food processing plants around the country. Well, I'm not a conspiracy theorist. Yeah, I kind of like to read the whole book instead of reading the end first. Anyway, but here is a question posed in an article that I read this morning. So here was a question that was in an article this morning. In a typical year, how many planes crash into food processing plants? In a typical year, how many planes crash into food processing plants? Crazy question, right? Well, of course, the answer should maybe be 1 in 50 years or less, right? But this year, we're up to 2 so far, or more specifically, 1 crashed into a plant and 1 crashed about 300 yards from one. Huh? How bizarre, but there's more. Some folks on the internet, and even Tucker Carlson, started noticing other news reports about other fires and other food processing plants. Check these coincidences out. This year so far, February 5th, a massive fire swept through a Wisconsin River meats plant in Boston on Thursday, destroying part of the facility. On February 22nd, these are the headlines, the Shearer's food plant in Hernston, Oregon caught fire after a propane boiler exploded. March 17th, a structure fire at the Walmart distribution center in Plainfield, Indiana, broke out at noon on Wednesday. About 1,000 employees were inside, but none were injured, officials say. 1 firefighter suffered minor injuries. Headline on March 22. A fire that broke out in the Nestle Hot Pockets plant in Janesboro, Arkansas on March 16 had the facility still closed as of March 21st. March 25th, headlines. Officials believe a deep frying machine is behind the fire that destroyed a potato processing facility in Belfast. April 13th, headlines. Firefighters from several departments in Maine help battle a massive fire that destroyed a butcher shop and meat market center in Conway, New Hampshire. April 13th, headlines. A soybean processing plant caught fire in the Purdue Farms plant in Chesapeake, Virginia. Look, there are more. And of course, all of these articles on the internet and the famous Facebook fact checkers are all denying that anything is happening here. And the reports I read all say it's insignificant damage, but imagine you had this warning about the baby formula crisis. Did you guys also know that there are reports of a global soil shortage? That's right. Now we have something else to worry about. Apparently, topsoil erosion is the #1 problem. Look, I'm not going to get into all of this because I probably will cross the misinformation line and get this show shut down again. Do some Google research on this, and you'll be surprised at what you see. Also, on a side note, I want to let you know, I have no intention of ever committing suicide. Let's take a break here while I check my security camera for intruders, and maybe even Hillary Clinton. See you guys in a minute. Hi, I'm Larry Steinhouse, and I've written a book called Money Hacks. The subtitle to this book is because everything you think you know about money is wrong, and I promise you there are things you think about money that are wrong. There are chapters in this book that I think you will find absolutely fascinating, and some of them are, what is money anyway? Can money buy happiness? I'll bet you don't know the answer to that question. The truth about credit scores, how you can actually use credit cards to rebuild your credit. I also have chapters on being your own bank, how to buy houses with an IRA, and how to invest with other people's money. There are so many other chapters. There are 22 total chapters in this book, and I promise you're going to learn how to make more money and pay less taxes when you buy this book. My name is Larry Steinhouse. The name of the book is Money Hacks. You can get this book wherever fine books are sold, and you can go to barnesandnoble.com right now and pre-order it. I hope that you will enjoy it. Welcome back to Money Chat Now. I'm your host, Larry Steinhouse. By the way, did you guys order the book yet? Order the book. What are you waiting for? All right, so far we've been discussing, of course, the futures, and right now the Dow is down again, 128. The S&P is down 13, and the NASDAQ is down 24. We had a slight moment there where it was up, but we'll have to see. We talked about Fintech and Apple and how, actually my favorite part of the article was the fact that all the Apple chargers will be uniform now. Hey, did you get your equity out of your house? Get your equity out of your house, because you're going to need that equity to cover the food supply shortage that's coming. All right, I haven't been suicided yet, so we'll talk about the food supply shortage. Actually, just let everybody know about the food supply shortage. I would buy some extra food just in case. Coming up, of course, we have today's picks and plays. But first, did you guys hit that like button yet? Did you guys hit that share button yet? Come on, guys, hit the share button, hit the like button. Let everyone know what great stock plays are going to be coming by sharing this information. And don't forget to share it on your page and in groups you feel that might benefit from everything we talk about. You can also leave comments on Facebook, Twitter, LinkedIn, and YouTube. And of course, if you're watching for the first time, just say hi. Just go into the chat box, or not the chat box, the messenger box, whatever it is, or leave a comment box. That's what I'm looking for, the comment box, and say hi. All right, if you're listening on WWDB Radio, 860 AM, set one of your presets to this channel and listen every day at 7:30 for all you need to know about the politics behind the stock market. Had a couple of people come up to me the other day and tell me that they listened to my show on the radio, and I was like, wow, you must be the number 9 and 10th person to listen to it on the radio. Now, I'm just kidding. I'm sure there's at least 12 people listening to it on the radio. All right, let's talk about today. What should we expect today in the market? I believe it's going to be a lot of the same thing, which is nothing. We may get a slight movement up or down, probably close up or down less than 200 points in the Dow, mainly because the investors are waiting 2 more days for the exciting news of the CPI data. This date will determine the fate of the next interest rate rise and a general look at inflation. Gas prices, of course, the main issue here, and the dullard in the White House can't figure out how to solve the problem. Basically, it's because he's too busy thinking about where he put his binky. Well, some of the plays I like are in still untapped spaces in the recovery. I also suspect oil prices will start to go down a little bit after the world is done spreading its message to the brain-dead president we have here. My favorite stock plays at the moment are Meta, Apple, Amazon, CCL, AAL, and Google. Those should hold you through and make you some money. Also, if you really, really want to be conservative, maybe AT&T or other dividend-paying stocks that hardly move. Look for a choppy day. Now let's take a look at the final view at the futures. And right now the Dow is down 130, the S&P is down 13, and the Nasdaq is down 28. All right, let's talk a little bit quickly about crypto. Look, I'm going to tell you that crypto regulations are coming. I was going to do a report on this, I just didn't have time. But crypto regulations are coming, and the Dumbocrats in New York are changing the rules for Bitcoin mining, as we discussed yesterday. So you can't do Bitcoin mining in New York. Unbelievable. Plus, the economy is slowing, so I really think it's a bad time to get into cryptocurrency. Bitcoin right now is about 30,000 and holding there, and Ether is hovering at around 1,800. I told you my thoughts are that Bitcoin's going to hit 22, and Ether probably will hit 11 or 12, and I'm going to say probably within the next 60 days. Anyway, gold and silver aren't moving at all, and they haven't moved. Haven't moved in 2 weeks. I mean, I just keep typing the same number: 1850 and 22, 1850 and 22, 1850 and 22. I bought some more. Silver this morning because I actually think that silver is a good play, but it's also good in case the world comes to an end. All right. Also, the Treasury bonds are moving up, and they're once again above 3%, so that may cause some danger again. So as you know, every time the Treasury bonds go over 3%, the Nasdaq drops a little bit, but I think the market is getting used to 3%, so I think they're going to start looking for 3.25% to be the next thing. Oil, oh boy, oil prices are up to $121 a barrel, and the gasoline average price has moved up again to $4.95 a gallon. Hey, let's all give a cheer here. Let's go, Brandon. Let's go, Brandon. Good job. You are so awesome. Wow. All right, I want to thank all the listeners in WWDB Radio 860 AM in Philadelphia. I want to thank you for your continued support. And if you're enjoying the show, please reach out and let me know. My name is Larry Steinhouse. I am the host of Money Chat Now, and I am the CEO of Investor Schooling. And by the way, if anybody wants to contact me directly, you can go to contactlarry.com, contactlarry.com. And of course, one more time, as usual, as you know, from time to time, I own some of the assets and options discussed in this show. No one has asked me to make opinions on this show. The opinions are all mine. And if you're a fan of the show, you like my opinions, so keep listening. We'll see you guys tomorrow. Have a profitable day.